Imagine you work hard every day, but your bank account is always empty. Bills pile up, and no matter how much you cut back, there's never enough left to save. People tell you to just budget better, but how can you budget when there's barely anything to work with? Here's the truth. Most budgeting advice is made for people who already have extra money. Useless if 100% of your income goes to rent, food, and bills. The idea that skipping coffee will make you rich? A joke when you're struggling just to get by. But here's the good news. You don't need more money to take control of your finances. You just need a new way to budget. One that works when money is tight. In this video, we'll show you how to budget, save, and build a better future, even on a low income. Let's begin. Number 1. The hidden budget trap. Why most budgeting advice fails the poor. If you've ever tried to follow a budget but still felt broke, it's not your fault. Most budgeting advice is made for people who already have extra money. They tell you to save 20% of your income or cut unnecessary expenses. But what if every dollar you make is already going to rent, food, and bills? The problem with traditional budgeting methods is that they assume you have extra cash to move around. But if you're living paycheck to paycheck, these rules don't work. You can't cut what isn't there. Another issue? Most budgets don't consider unstable income. If you work part-time, do gig jobs, or rely on government benefits, your income may change every month. A strict budget won't help when you don't know how much you'll earn next. So, what's the solution? Dynamic budgeting, a flexible way to manage money when income is low and unpredictable. Instead of fixed percentages, this system helps you focus on survival first, then growth, and finally long-term savings. Number 2. The $0 budget. Start where you are. Most people think budgeting is about dividing money into different categories, but when you're broke, there's nothing to divide. That's why the first step isn't about cutting expenses or saving. It's about making sure you can survive. A $0 budget means you start with what you have, even if that's nothing. Instead of planning with imaginary money, you only focus on what's real. The first goal is to cover basic needs: rent, food, transportation, and essential bills. This is your survival budget. If your income barely covers these, then the focus should be on stretching every dollar, finding assistance programs, or reducing costs where possible. Once survival is covered, the next step is growth. This means putting small amounts toward things that can improve your situation, like learning a skill, fixing your credit, or setting aside even a tiny amount for emergencies. The final step is long-term financial security, but that only comes when the first 2 steps are stable. The key to budgeting when you're poor isn't about perfection. It's about taking control of the little you have and making it work for you. Even with a low income, small changes add up over time. Number 3. How to save money when you can't afford to save. Saving money sounds impossible when every dollar you make is already spent on food, rent, and bills. But the secret to saving isn't about having extra money. It's about making small changes that add up over time. One powerful trick is to save before you pay bills, even if it's just $1. When you tell yourself you'll save whatever is left at the end of the month, there's usually nothing left. But when you move even a tiny amount into a separate place first, you train your brain to see saving as a priority, not an afterthought. Another way to save without feeling it is to use invisible money. This means setting up an automatic transfer of a few dollars into a separate account that you never touch. Some people save by rounding up every purchase to the next dollar and putting the extra change into savings. Others follow the $5 rule, where every time they get a $5 bill, they put it aside. These tiny amounts don't feel like much at first, but over time, they grow into real savings. The key is to start small. Even if you can only save $1 a week, it's better than nothing. The habit is more important than the amount. And once you build the habit, saving money becomes easier, no matter how little you earn. Number 4. The invisible expenses keeping you poor. Most people think they're broke because they don't make enough money. But sometimes, the real problem is where their money is disappearing without them noticing. Take a closer look at your bills. Many low-income neighborhoods have higher prices for basics, groceries, rent, even gas. Stores in poor areas charge more because people have fewer choices. This is called the poverty tax. You pay more just because you're poor. If you don't compare prices or shop at discount stores, you could be wasting hundreds of dollars a year. Then there are late fees. When money is tight, it's easy to miss a payment. But every late fee is money you could have saved. Some companies let you change your due date or remove fees if you call and ask. Even banks will sometimes refund overdraft fees if you explain your situation. Payday loans and quick cash services seem helpful, but they trap you in a cycle of debt. They charge crazy high interest rates, turning a $100 loan into a $500 debt. Instead, try borrowing from community banks or credit unions, which have lower fees. Small leaks in your budget can drain your money fast. Fixing them can feel like getting a raise without working extra hours. Number 5. Making more without a second job. Money you're overlooking. Most people think the only way to make more money is to get a second job. But what if you could find extra cash without working more hours? The truth is, there's money around you that you're not noticing, and small amounts can add up fast. One simple way to get extra money is by using cashback apps. If you're already buying groceries, why not get some of that money back? Apps like Fetch Rewards or Ibotta give you cashback just for scanning your receipts. Some people save hundreds of dollars a year this way, without changing what they buy. Another easy way to make money is through referral programs. Many companies will pay you for referring a friend. Banks, phone companies, and even food delivery apps offer rewards when you invite people to sign up. If you share your referral links on social media or with family, you could make extra money without doing any extra work. There's also invisible income that most people forget about. Have you checked if you have unclaimed tax refunds, lost bank accounts, or government benefits you qualify for? Many people are owed money, but don't realize it. You can search online for unclaimed funds in your name. It only takes a few minutes. You don't always have to work harder to make more money. Sometimes, you just need to look in the right places. Number 6. Smart debt strategies for low-income earners. Debt can feel like a heavy weight that never goes away, especially when you don't earn much. Most people say, just pay off your debt faster. But if you're already struggling to pay rent and buy food, where will that extra money come from? The truth is, paying debt too aggressively can actually make things worse if it leaves you with no cash for emergencies. Instead of trying to pay everything at once, focus on making your debt cheaper. Call your credit card company or lender and ask if they can lower your interest rate. Many companies will, but only if you ask. If you have multiple debts, pay the smallest one first while making minimum payments on the rest. This creates small wins that build momentum. If bills are overwhelming, try negotiating payment plans. Some companies will pause payments or reduce them based on your income. Managing debt isn't just about paying, it's about making it easier to handle. Number 7. Building an emergency fund when you're broke. Saving for an emergency sounds impossible when you barely have enough to live. Most advice says to save $1,000, but when you're struggling, even $50 can feel like too much. The key is to start small, so small that you don't even feel it. Even saving just $5 at a time can add up over months. The best way to build an emergency fund is to make saving automatic. If possible, set up a second bank account and move a tiny amount there every time you get paid. Even if it's just $1 or $2, it builds the habit. Another trick is to use cash savings. Put all your $5 bills or spare change in a jar and don't touch it. The goal isn't to save a huge amount right away. It's just to have something, so when a small emergency happens, you don't have to borrow or go deeper into debt. Even a little safety net makes a big difference. Many people believe that only rich people can budget, save, and get out of debt. But the truth is, you don't need more money to take control. You just need a better plan. Even with a low income, small steps like tracking your spending, cutting invisible expenses, saving tiny amounts, and making smarter debt choices can change your life over time. Your financial situation may not improve overnight, but every small action you take brings you closer to stability. You are not stuck. The key to a better future isn't waiting for more money. It's learning to manage what you have now. Now, if you want to learn how to achieve financial success, then watch this video next. If you made it to this point in the video, please like and subscribe to the channel to see more content like this. Thanks for watching, and I'll see you in the next video.